Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. The Evergrande saga continues this week, as by all accounts, the company has missed its coupon payment. So it looks like, although they have 30 days before they're actually considered in default on their debt, it does look like they are going to miss their payment. China, for its part, has told local investors to prepare, or local authorities to prepare for default on Evergrande's part.
Local officials have been ordered to prepare for a possible storm. So that means reaching out to private as well as state developers to try to find a way to take over certain real estate assets if necessary. Also to study ways to offset the impact on home buyers and jobs. So a broader look at the broader impact on the economy, setting up teams to prevent unrest. And
so it's definitely not looking good there for Evergrande and for the rest of the Chinese economy, really, which we'll get into. But what I really want to talk about today is all of the commentators and so many people in the news media saying that this isn't a Lehman moment. A lot of headlines were made at the end of last week and the beginning of this week on this channel and in the media that this was China's Lehman moment. Looking back to when Lehman Brothers collapsed in 2008, and which is widely seen as a large contributor to the global financial meltdown. What I want to do today is briefly look at why people are saying that this is a Lehman moment for China. I think there's a lot of misunderstanding in the media and in amongst a lot of commentators as to why people were calling this a Lehman moment.
Similar to what happened 13 years ago in the US when Lehman Brothers failed and the start of the financial crisis. I think we're now starting to appreciate that this is not going to be a Lehman Brothers moment. There's not as much leverage in the system.
That's why, despite what you heard in the press, the risk from Evergrande never really was systemic, okay? Because everybody wants to do business with China, so they...
Yes, Lehman was an investment bank, and Evergrande is a real estate developer. So obviously there are major differences between Lehman Brothers and Evergrande, but there's also a lot of similarities, which is what I want to go through today. So today I want to go through the top 3 similarities between Lehman Brothers and Evergrande, and why this could be China's Lehman moment, as the saying goes, apparently. And then we'll look at what to look at in the future. We will continue to have updates on the Evergrande saga as it continues. News continues to come out. It almost changes every couple of hours, so we'll try to put it all together as clear and succinct as we can. Click like and subscribe to get those updates. But for now, let's go into why Lehman Brothers and Evergrande are so similar. The first major similarity that I see between the two is whether or not they're going to be bailed out and the consequences stemming therefrom. The U.S., for its part, did not bail out Lehman Brothers, and everybody had really expected it to, especially after the fall of Bear Stearns and the quasi-bailout from the U.S. and J.P. Morgan, but also from the U.S. Everyone really expected for the U.S. to pull out Lehman Brothers and bail them out, and then they didn't.
Why did you agree to support the bailout of Bear Stearns but not Lehman?
Yeah, and the situation and the facts around Bear Stearns were very, very different to the situation we are looking at here in September. And I never once considered that it was appropriate to put taxpayer money on the line in resolving Lehman Brothers.
As a result, the stock market tumbled and credit started to dry up throughout the system. So it was really where you expected the U.S. to do something, and then they didn't. And when markets don't get what they expect to see, it creates panic and uncertainty. Fast forward to Evergrande, where most people, myself included, expect China to at least quasi-bail them out, to provide either a smooth transition, a direct cash infusion, etc., etc., etc. So, China has already actually done
Now, the Chinese central bank has come to the rescue, injecting more than $23 billion into the banking system, helping Evergrande's creditors avoid a worst-case scenario.
China, although everyone was expecting them to bail out, Evergrande has said that they're not going to do it, and they're asking local authorities to prepare for its collapse. Obviously showing that there's going to be wide-ranging effects from Evergrande's downfall. So why call this a Lehman moment? A bailout was expected for both. And one, Lehman didn't get it, but China's at least being a little bit more proactive this time around. And I think they're doing a lot of coordination behind the scenes as they're trying to manage this bailout more proficiently, a lot better than the U.S. did. They saw how bad things went in the U.S. after Lehman wasn't bailed out, after it was allowed to fail. So they seem to be recognizing that this is their Lehman moment, and they're being much more proactive. And that's why people are calling it a Lehman moment. Second, demonstration effects. When Lehman Brothers failed, it put a spotlight on all of the other investment banks and all of the other mortgage-backed securities that had been injected into the system. Lehman Brothers failed because it had so much bad debt on its books. It had way over-purchased mortgage-backed securities. That's groups of mortgages sold under one security, which largely had bad loans in the mortgages that people shouldn't have been, people should never have qualified for. No income, no job, no assets, had a mortgage, and those mortgages were sold to Lehman Brothers. That's the quick and dirty of it. Obviously, it's much more complicated, but it put a spotlight on how much bad debt, not only that Lehman had, but how much bad debt did the rest of the banks have. So as soon as Lehman Brothers went down, all of the other banks had a spotlight on them, which caused a run on but a lot of people wanted their money back. A lot of investors started pulling their assets, pulling their deposits, which led to a credit crunch. So then other companies can't finance their operations because their credit's drying up, and then we have a snowball effect. Something very similar is what is being worried about in China right now with Evergrande. As Evergrande is being shown to have too much debt that it can't handle, while investors are going to start to look at the rest of the real estate development market in China as well. No one takes too close of a look at things when everything's going well. There's too much money to be made, which we've heard quite often here in the West. But when things start to look bad, well, that starts to draw a spotlight onto where all of the holdings are in all of the companies and what everything is worth. And is it worth what we've been saying it's worth? So on the one hand, you see Lehman. As soon as it fails, as soon as it's allowed to go bankrupt, a spotlight gets put on all of the other banks, and then we have a credit crunch. In China, as this Evergrande scandal, as this Evergrande situation becomes more and more in the news, more and more is coming out about it, and there's going to be a spotlight put on all of the other real estate developers throughout China and how much debt they have, and are their properties worth what we think they are. And again, here we have a Lehman moment for China. Third, and I think most important, too big to fail. Lehman Brothers was the fourth largest investment bank at the time. Its holdings were vast. It accounted for a large portion of the credit market, of the mortgage market in the U.S. When it failed, it sent shockwaves all over the place. I think 25,000 people directly were laid off. But let's also talk about the indirect effects. Real estate accounts for a huge portion of U.S. GDP at the time, and we felt it even here in Canada at the start of the financial crisis, as credit dried up and people couldn't finance their day-to-day operations. The companies couldn't finance their manufacturing, their payroll, etc., etc. As that happened, that again, everything just snowballed. There were such wide-ranging effects from the downfall of Lehman that it was felt to other sectors of the economy that weren't even in the financial sector. And that's where we come into why this is a Lehman moment, again, on the part of Evergrande. Evergrande is the second largest real estate developer in China. Real estate in China is thought to account for 25% of China's overall GDP. Not just the development part, but the construction workers, the suppliers, the finance, of course. All of these other spillover effects, spillover jobs created by real estate is thought to account for 25% GDP. We're not talking making iPhones here. We're talking about the whole real estate sector. To give you an idea how big that is, real estate in Canada represents 10% of our GDP, roughly. And when that starts to pull back, we see a shrink in our GDP numbers that just happened last month, or earlier this month. Very, very recently. we saw a pullback in our GDP numbers because our real estate suffered, and it only accounts for 10% of our GDP. If Evergrande is the second largest real estate developer in China, and GDP is, and 25% of GDP is real estate, well, the downfall of that developer is going to be widely felt. That is almost too big to fail, and it's a company that they have said they are going to let fail. Managed, but it's going to fail. Lehman Moment. So, when you look at these three similarities, no bailout, even though one was expected, demonstration effects, a whole big spotlight being put on that industry, and being too big to fail, which, I mean, obviously, Evergrande is huge, as was Lehman Brothers. These three reasons are really why people are calling it a Lehman Moment, not because it's an investment bank. People know it's not an investment bank. It's because of these three big, huge similarities and the wide-ranging effects that could happen once and if Evergrande fails. Now, as far as what to look for next as this crisis unfolds, articles are starting to come out here in Canada, and people are doing investigations into how much exposure Canada actually has, Canadian banks have, Canadian investors have, to the Chinese market. So the Globe and Mail actually has a really good article out today. It's under a paywall. It's under a paywall, but I'm sure there'll be more and more articles out. The Globe and Mail article doesn't seem to find too much exposure directly to Canadian banks, to Canadian investment firms, to our pension funds. But also remember, this is just Canada. The U.S. firms, international firms, EU firms, all have made investments into China. China has made investments elsewhere. We are so interconnected. So, as this unfolds, we're going to have more and more investigations will be done in to see what everyone's exposure is to the Chinese real estate market and how big this is going to go. And as always, we'll have more updates on these investigations on this channel, and as to how much exposure there is from Canada into China, in China into Canada, as more and more information comes out. So if you want to get that information, click like and subscribe, and we'll have updates as they come out. Thank you.